Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and how we can plan for a better trade for the next day. So this is analysis for May 17, Tuesday, tomorrow, 2022. So what kind of market we had? We had a very volatile market with indecisiveness that is there, and a downfall as expected did not happen today. Market has taken a stop. The banks were doing good, right? Let's get and see what exactly happened, right? So as usual, the pre-market analysis for the May 17 Tuesday tomorrow will be based on all these parameters that you see there, right? We'll also have some wrap-ups and actionables as well, right? Each of these items will be looked up in the next coming slides. So here is the daily charts for the Nifty and the Banknifty. You can see that it's an indecisive doji that is formed, right? You can see the big sizes. That means the big bull and bear fight has happened there, because a lot of people want market to be down, a lot of other people wanted market to be hold there, and they're buying it, right? So it is a big. So this is where the consolidation get to happen. So basically there is indecisiveness on what to do in the market. That's what happened. But look at Banknifty, it's giving a different picture. It's again inside bar before the previous big fall, right? It did not close above the previous bar, and it closed green, showing that there are buyers in the bank stock at this stage, right? Remember, it is little further, little away as compared to the Nifty. Nifty is almost there at the previous swing low, but it's little away, right? So that may be the strength that the Nifty is probably showing, right? So remember that there is a major gap resistance to the upside for both indices, two of them for the Nifty, two gaps. And let's see the numbers. So it's more or less flat, 60 points gained, close green, but indecisive. Banknifty did well, near 500 points gain, 1.5%, and it's a down sliding trend line, as we can clearly see that all the moving average has gone, right? It broke down and it's in the trending channel, both indices, right? Huge resistance to the upside from the moving average as well as gaps and or whatnot. Intraday price action looks something like this, right? It was a downfall since last many days. Today it seems like it was consolidation, so it's a big steep downfall and then kind of consolidations. Today's part is the 16, that comes 16th, right? So it's moved up 1.5%, and then it gave up almost everything, and then it could not climb back there. That's what happened. Banknifty, meanwhile, it also moved up initially for 2% and then gave up half of that, and then could retain green, could retain back to the position where it had initially moved. That's a price action. Bollinger Bands are clearly showing bearishness because the band is expanded to the downside and walking on the bands. Clear bearishness evident on both indices. Support resistance levels showing 15.8, 59.50, which is Fibonacci 16 retracement would be the major resistance to the upside. Above that you have 16.200, then 16.350, 16.450, Fibonacci 50. Above that 16.550, 16.650. There is a gap resistance that it has to overcome that. Then 16.700, 770, and 16.800, 16.900 is Fibonacci 38. That's the resistance to the upside. Downside you have what, 15.500 and 15.650 would be the first resistance, would be a previous swing low also. If that's breach, then we have trouble. 15.350, 15.450, and then 14.900 to 15.100 range. That's immediate downside that you can see on the Nifty. Banknifty similarly, you can see that the first support on breach of the current level where it is would be 32.800, right? 3400 to 3800, then below that 31.800 to 32.150. Then if that's breach, then you have 30,500 to 31,000 kind of levels. It's right. That's what you see as the previous resistance, previous support zones. Similar resistance on the upside would be 33,800, 34,000 Fibonacci 61 retracement. That is where it is facing trouble today. Also the resistance is there, right? So conquering that would be ideal, and then 34,350 to 34,750. Above that, then you have the gap of 35,300 level, Fibonacci 50 retracement level also. Above that it's 35,600, 35,900. Then comes the 36,800 levels, Fibonacci 38, and then above that you have another gap resistance which is coming at 37,000 nearby, and then 37,500 Fibonacci 23. Moving above that gap would mean that the downfall is over, right? So that's the support resistance levels for the Banknifty and the Nifty. Momentum has its bearish zones, and it's rising momentum. That's what you see. Today's small up moves. It's forms from the hook like thing that you can see there, but overall it's a down sliding bearish momentum that you can see on both the indices on the daily time frame as well as the weekly, both time frames. So no doubt over that, momentum is bearish. Trend is also bearish on both the time frames, and you can see that the strength of the trend, the strength of the bearishness is increasing with the green line that is moving up. That's both on the weekly and the daily, both time frames. So we have seen this trend bearishness that there is evidence in several weeks now. Now the volatility did move up a little more again, and then very close to 25 levels. 24.52 is where it was, 4% of up move. But volatility of Nifty is 23.7, very close to 24, and IP percentile is also on the peak. Right, it's a 52-week IV. Implied volatility value of Nifty is what you see. So greater than 24 is clear bearishness. You have to be very extremely careful when the volatility is at there, when you're playing intraday especially, or swinging also. Now this is the open interest analysis for the expiry. That is May 19, 2022. A few days left. There is Monday, Thursday's expiry for the weekly. The levels that you see is that for that 15,000 and 17,000 is 2,000 points wide is where the option put riders and the call riders are seen. 15,800 and 16,500 is where the next level of put and call riders are seen. That's where the support resistances can be seen. Banknifty 33,000 and 34,500. That's what 1,500 point of range with put and call riding is seen. 32,500 and 34,000. Second level of support and resistance are seen. But look at the Banknifty showing bullishness clearly. 0.74 is the put call ratio, but Nifty is showing 0.51, which is very closer to the bearishness basically. So it's contra. It's a long build up that has happened on the Nifty. So futures open interest is showing there is a long build up. And short covering is what even the Banknifty. Short covering is also bullish. So open interest is saying that today's futures as well as options open interest is showing that it's more of build up of towards the bull side is what it says. Although the range is wide, does not give much clues. 15,000 and 17,000 is far away, far wide apart, so it doesn't give much clues from the open interest levels wise. But today's movement was clear bullishness on both indices. What it says with Banknifty a little more as per the put call ratio. Now look at the heat map, which is having green back, and then IT stocks didn't do well. ITC also is doing okay. All these days didn't do well. HDFC Twins did well, and banks did well. So what didn't perform is FMCG and healthcare. All the other sectors, across the sectors, you had good movement, price movement, up move that happened today. Now look at the index heavy whites. You can see that the HDFC Twins have slipped from the support zones, right? HDFC Bank was holding the support for long. It has given up that, now the bearish zones. Same momentum is in bearish zones for the HDFC as well. It has earlier given the major support, and it's in a down sliding trend line, channel basically. Lions is a cup and handle breakout which didn't succeed, and then it has found its bottom at the previous breakout zone, and then it seems to be attempting to move upside, but there is selling pressure on the top. Momentum is already in the bearish on the short term, so it has to catch up and get into sideways before we can say anything. And if he continues, IT sector continues to fold, and if he is another red day and bearishness continues, and there could be a potential bullish momentum divergence that can work out, that is visible as of now. And TCS is also momentum is bearish, and it is at a major support zone, right? It is still not fallen from a retracement of more than 23, which is surprising in spite of market falling, correcting 15-20%, right? So TCS is IT stock. It is not doing good. It is bearish, but it is trying to consolidate instead of cracking down from this major support zone where it is, even though the momentum is bearish. ICICI Bank also kind of consolidating. Some green is seen today. It is at a major support zone of as an Indian triangular breakout that happened months before, right? Just taking a support back to that place where breakout happened. Now it may consolidate here. If that happens, then it's good. But remember that the momentum is bearish already, so anything can happen. Trend is also against. Kodak Bank is an exception in the bank stocks. It has been performing, but moving up and down. So basically, sideways momentum is what you see in Kodak Bank, but it's not ready to fall by any chance from this major support zone. Any break from here would be disastrous for the stock. So Kodak Bank showing green yet another day. Sectoral performance, if you see IT, so it is a mixed bag today. IT moved down, and pharma moved down, FMCG moved down, but reality auto and metal moved up. Right. Overall, if you see, the only two sectors are auto and FMCG, which is sideways momentum in the short term. Some other sectors are all bearish in the short term. So just have to stay away from the approach. Right. Autos can be closely watched, whether it's managing to climb back with the bullish sounds or not. That's the only thing that is giving some hope as of now. But sectoral approach of picking the stocks may not be possible at a point in time from this analysis of top down. Institutional participation, if you see, data does not come in, but remember that Fyers had been selling heavily with 5,000, 3,000, 4,000. Nowhere near 1,000. It's all 3,000 above that. Continuous selling is happening since several. It's almost a year that this is happening, right? Last several months it has intensified after the inflation hike in the US Fed. It has increased to a much higher level of selling. That is what is happening. But the US are buying equally and trying to hold the market, but you never know how long it will hold. And dollar index and currency pair, if you see, currency pair has made all-time high. Now $1 costs 77.8. That means rupee has weakened to an all-time high levels, crazy levels, right? US dollar is also shooting up and then going out of hands, right? It's a multi-year high that the US dollar index is making. Not good for us to have a weakened rupee. Dow Jones has had given up the major resistance zone, hanging on at the edge of the channel, and seems there is some attempt to climb back into the sideways, but it's not materialized yet. Same with the Nasdaq, same pattern, just trying to climb back and reconquer the support zones from where it had slipped off. Even S&P 500 also is showing some attempt. You can see that it is reversing and then trying to climb back in the sideways, but we'll have to see whether that fails and then falls back the bearishness or not in the momentum on a daily time frame. So watch out for that. But it's not good that US markets are unable to climb back, and seems like it has given up. And then the only thing that has to be watched is whether it is fully cracking down into the bearish zones, or is it going to consolidate slowly for some period at least. That's what we have to watch out for. But the supports are gone. Crude oil consolidating basically in the same range, 100 and 110 within that range. Now it's 107 and goes to 100, then comes to 100. That's what is happening. Basically sideways momentum, but it's far away from the 60-70 levels that we had hoped. Not good for economy once again. Interestingly, gold is unable to hold in spite of market cracking, equity market cracking globally. Gold is unable to move up and break out and make a fresh new all-time high. That's not happening because the dollar is shooting up and dollar index is shooting up. All the transactions gold is happening in dollar index. So fundamental reason may be that, but gold seems to be weak, and then today it seems to have taken the second supports from where the breakout move attempt had happened months back, right? So it is the bearish zones in the momentum perspective. So yeah, so the Fed interest rate hikes is to curtail the inflation. So gold is inflation hedging instrument. So when inflation comes down, then gold does not become a hedging instrument anymore. That may be the reason that the fundamentalists may explain, but the charts are showing that it is weak, at least in the very short term. Actionables 2 short trades in the Ultratech Cement and HCL Technologies. Both have breached the support levels, momentum support as well as the price supports. Right? Trend is clearly bearish. HCL Technology sector itself is going down, cracking, and momentum has slipped in the bear zones. Trend has slipped in the bear zones. Price is at the edge. Just have to watch out if the price moves below the previous candle's low. If that happens, that will be an entry signal. Fundamentally, both are all strong stocks, but when the charts are saying that it is bearish, you have to go with the trend, right? So to stock pick, short call for the next day. Wrap up is very easy. It's moderate bearishness continues for the third or fourth day, or more than that. Right? There's not much change that has happened. It's clear bearishness that the chart is selling. The momentum, the trend, the Bollinger Bands, right? Price action, support levels, all are saying it's bearish. So we just have to go with that. My view remains the same. One thing you have to keep in mind is a crucial support. It's a do or die. It's a critical, crucial zone. If this holds here, or if it consolidates here and then moves up, it's possible. Could be possible, right? Because breaking that would mean that a lot of big players have turned bearish, and it can be a big crash from there that can happen, making another new low, swing low. That could happen. So all this got triggered up when the RBI made the rate hike on before. US market front increase, inflation made historic highs and FIs continuously selling. So what more we need with the crude also rising high daily and rupee weakened to 78 nearby levels. Right, so it's bearish all around. War is still happening. Remember, the volatility is near to 25. Can you imagine that we're going back to the 30 levels, which we thought we managed to survive, exactly 2 months before. But that does not seem to be the case. The VIX is rising up daily, slowly. Volatility is in the market. Price are continuously selling. All the negatives are there. Positive factor is that we had survived a war of 1 month and still managed to come up in 4 weeks time. 4 or 5 weeks time with 20% up move in the Banknifty and 15% up on Nifty. So that's possible. That confidence is there in the retailers. That's only a good thing. But otherwise, stay away from the market when the VIX is greater than 24, especially if you're into trading. Investors will have to hedge it with gold or options strategies. So any options trading that you're doing has to be hedged. Otherwise, it is exposed to a heavy overnight risk, and then you may end up wiping out your capital. So always have risk-defined strategies where you know exactly what you lose, and position size cut short when the VIX is rising up and the market is falling down. Position short if you're into trading, and at the same time, go in for buying the best quality stocks which are selling it cheap, not at short but at different SIP mode. Small quantities buying can be possible if the market is crashing down this crucial support zone where it is. That's my new moderate versions for the next day, and hope it helps you to frame your own view and market plan for the next day. So if that helps in some way, consider the like button and share to your friends. We have very few subscriptions and appreciate your help in this regard. Also, another announcement is that I'm trying to close down this daily market analysis from June 1st. It will be only weekly market analysis that will be there from then on, because it makes more sense to for my efforts that's put in here, right? If you have any feedback on this, please put in there. Thanks for watching. Happy trading, happy learning. Bye bye.